Hi, everyone, and welcome back to another Money Not Math conversation. Today, I'm talking about 10 Social Security rules everyone should know. All right, so some of you may think Social Security is going to be a huge part of your retirement. Some of you may think there's no way Social Security is going to be around because they're on pace to have the Social Security reserves bankrupt in the next 20 years, right? So regardless of where you are on the spectrum, it's still important to understand how Social Security could affect you or how your planning could affect your Social Security. All right, so rule number one is something that you probably or may have noticed from when you pay your taxes, but it's important to remember for our later rule we'll highlight. 6.2% of all of your income is a payroll tax into Social Security. That's how it gets funded, current workers. And then your employer has to match an additional 6.2%, so additionally 12.4% of your income goes into Social Security. All right, so you pay tax and then you contribute. All right, so you've already paid tax once. Keep that in mind. If you are self-employed, you actually have to pay both ends of those spectrums, so you have to pay the full 12.4% yourself. The employer doesn't have to do it. All right, number two, there's a $137,700 tax cap. The maximum amount of earnings subject to Social Security tax is $137,700 in 2020, and that steps up a little bit each year based off inflation. And this is actually really interesting. So I'm a firm believer in moral capitalism. And I'm a firm believer in not overtaxing people just because they work really hard for their money. But I do find it interesting that we cap the amount of money that's being taxed. I feel like if it wouldn't be a terrible idea to just not have a cap on there, because if we're making more, maybe we should contribute more because we'll get more of a benefit. But it's kind of interesting for anyone who knows me. That might have sounded weird because I'm the way I look at taxes, I don't normally like to overtax someone unnecessarily, but that one cap is quite interesting. I'd be interested to hear the history as to why they decide on that number. Number three, 35 years of earnings. Your Social Security payments are calculated using 35 years in which you earn the most. If you don't work for at least 35 years, zeros are averaged in and will reduce your retirement payments. So essentially what they're saying is if you want to have a decent average, you should work for at least 35 years or your average will be declined by adding in zeros. Something important to keep in mind there. The average payment is $1,503 per month. Retired workers will receive an average Social Security payment of $1,503. Retired couples bring in an average of $2,531. Within that, something to keep in mind is your Social Security benefit day one isn't the same throughout your retirement. They actually do apply what they call cost of living adjustments. I don't know why he quotes, but they actually do cost of living adjustments based off of what they determine the rise in cost of living. The weird thing with that is, or the interesting thing I should say, is those cost of living adjustments increases have ranged from anywhere from 0% in 2010, 11, and 16 to 14.3% in 1980. So it's really hard to plan around the expected increases because we really don't know what that will look like. But they do say in 2020, we're looking at about a 1.6% increase. And the maximum Social Security benefit that someone can receive is $3,011. All right. Your initial eligibility is at age 62. I think most people are aware of this, but something to keep in mind is that if you start taking payments at age 62 and your full retirement age is 66, your payments will be reduced by 25%. So if you were going to make $1,000 per month Social Security, or I shouldn't say make, if you were going to get $1,000 per month off Social Security at age 66, that's your full retirement age, but instead you decide to take it at 62, you only get about $750 per month benefit. If your full retirement age is 67, it will drop by about 30%, so you only get about $700 per month benefit. So you can kind of see, because you're taking 1 year earlier based off your full retirement age, they do decrease it by an extra 5%. If you are a baby boomer, so we're not going to get into this a whole lot, but essentially keep in mind that if you were born between 1943 and 1954, you can claim full retirement at 66. If you're after 1960 or 1960 and later, it's 67. If you're somewhere in the middle, it's 66 in some months. All right. So the next point is the full retirement age will increase to 67. We just highlighted that. Maximizing your monthly benefits. If you wait till you're 70 years old, your payments do keep going up until you're 70. At 70, you've hit your cap. There's no point in continuing to wait unless there's some sort of tax planning reason around that. So here's a really important point. All right, extremely important. Hopefully you stuck with me this long to hear this part. $18,240 is your earnings limit. All right, so I know a lot of people today, and it seems to be getting more and more common, people work part-time or full-time while taking their Social Security benefits. What we have to keep in mind here is there is a point of diminishing returns. What I mean by that is if you make over $18,240 in retirement before your full retirement age, your Social Security benefit will decrease by $1 for every $2 you make over the $18,240 mark. So to put that in perspective, if your Social Security benefit is $1,000 per month and you make $18,340 per year on your whatever job you're working, they'll decrease your benefit by $50. I believe I did the math right there. But just to repeat myself to make sure I say clearly, beneficiaries who exceed the earning limit will have $1 benefits withheld for every $2 in income above the limit of $18,240. All right, so once you reach your full retirement age, they stop withholding that difference, and they say they reimburse you for a little bit of what they took, but it's not exactly clear how they do that. And the penalty decline once you hit your full retirement age, the earnings limit goes up to $48,600, and now they only withhold $1 for every $3 in excess of the earnings limit. So I know I just said a ton. Let me quickly repeat myself. If you make over $18,240 of taxable income, your Social Security benefits will be withheld $1 for every $2 of income you make over the limit. Once you reach your full retirement age, the earnings limit goes up to $48,600, and now your penalty declines to only $1 for every $3 in excess that you make. So it's really important to be aware of how much money you're going to make so it doesn't affect your Social Security unexpectedly. All right, another very important point. You might need to pay tax on your Social Security payments or your benefit. All right, so remember earlier when we talked about how you pay taxes on your income to fund Social Security? Well, now the government, in all their infinite wisdom, says that if you make over $25,000 of taxable income in retirement, they can tax your Social Security benefit again. It's literally a double tax. All right, so here's the details. If the sum of your adjusted gross income, non-taxable interest, and half of your Social Security benefits exceeds $25,000, so they include your Social Security benefits, half of them, against your Social Security tax. It's kind of crazy how they do that. It's almost like a triple whammy here. All right, if you're single and you have over $25,000 of taxable income, half of your Social Security benefit becomes subject to an income tax. That's literally, they will take up to 50% of your Social Security income and tax it at your highest marginal tax rate at that time. When you're single, if these income sources top over $34,000, income tax could be due on up to 85% of your Social Security payments. So you pay tax when you contribute. They include your Social Security income against your Social Security tax, and you can pick up to 85% on the Social Security income that you received when you're single. If you're married and you have between $32,000 and $44,000 of taxable income, now they'll tax up to 50%. If you're married and have over $44,000 of taxable income, they'll tax up to 85% again. Literally, it's a double tax. It's extremely important to be aware of. All right, so if all of your retirement planning has to do with deferring your taxes so that you'll pay them in retirement, be aware that you could be dramatically and negatively affecting your Social Security income. All right, so just to recap, the 10 rules that we highlighted, a couple of them being the more important than others, are most workers contribute 60.2% payroll tax. Earnings that exceed $137,700 in 2020 aren't taxed by Social Security. 35 years of earnings are factored into your Social Security benefit. The average Social Security payment is $1,503 per month in 2020. The initial Social Security eligibility age is 62. The baby boomer full retirement age is 66. The full retirement age will gradually increase to 67. So if you were born in 1960 or later, it's 67. To maximize your monthly benefits, you have to wait till you're 70. There's an $18,240 earnings limit if you claim Social Security before your full retirement age. and that jumps up to, I think, the 47,000 number I mentioned earlier once you are full retirement. And then retirees who earn more than $25,000 will have to pay taxable income, will have to pay a part of their Social Security benefit if they're single, and it's $32,000 if you are married, I believe is what I said. Yes, $32,000 if you're married. So those are 10 Social Security rules to remember. The most important ones, in my opinion, are understanding how the savings and the planning you do today can so dramatically affect the Social Security taxes you may have to pay in retirement. All right, so that's our Money Not Math conversation. In case I didn't mention it earlier, I'm reading this article from money.usnews.com. And the senior editor that wrote the article is Emily Brandon. I know some of these points I've highlighted in the past, but I think they're also important and worth repeating again. So let me know what you think. Reach out to me if you have any questions or thoughts, and I hope you have a great day. Thanks, everyone. Bye.